Hi, Steve here. Welcome to a market update with the S&P making new highs. I figured I'd just send you a short market update about where I'm looking at the market and where support and resistance should be, where support should be, and potential upside targets now that we're in uncharted territory. Okay, so we have the daily S&P here. We have the Nison candle scanner on that highlights our favorite candlestick signals. I'll give you a little heads up on that when I'm done with this brief update. But essentially, what I'm looking at is the fact that this market went from an had a sharp rally. Now, sometimes when you get bearish signals, we think normally, okay, the market's going to sell off. But at times, and that's what unfolded here, the market went from a very overbought condition because look at how the S&P rallied from 2100 to almost 2200 in a very short period of time. And by trading laterally, it digested the gains. There's two ways to relieve an overbought condition. One, by price. So in other words, the market could have a sharp rally and then have a sell-off, maybe 50% sell-off. And the second way is by time. Notice how the market rallied and then traded sideways for a couple of weeks. So however overbought the market was, it is now not overbought. And what that means is that this breakout here, and making a resistance line, it's fascinating how it's working so far. This old resistance, let me just try to lock this in here. There we go. This old resistance, it's not quite exactly right. I'd have a line here and here. This old resistance is becoming first support, and lo and behold, look what was support as of today. Even if it breaks under the support area, I'm not looking. That would be actually a crack, falling off the roof, and the downside would be here. So we're not talking about a major correction. But the reason I want to get this to you today is just to give you a heads up that the market has held our first support area. The market broke resistance with the tall green candle, made a rising window. That's what that plus W is. And as far as targets are concerned, now that we're in uncharted territory, we have to use measurements. So what I would look at is a swing target. So a swing target is you take the height of the rally and you add that to the correction low. So the rally, let's round it off, started at 2070, and let's say it let's round it off to 2170. So that's 100 points. Add 100 points to the correction low, which is over here, of 2150. So now we have an upside target of 2250. So with that in mind, this is first support, second support down here, and then I would use, to me, the key support for you longer term investors. Remember, we can use candles for investing also, is taking the old resistance area. Okay, sorry about that. Okay, minus S is a shooting star, and the shooting star becomes resistance. Again, this is all picked up with the Nison candle scanner. And let me make another line here. Okay. And actually, let me make another one here. So just to give you a zone, because the change of polarity is old resistance areas. So this zone here, this to me, if the market closes under, I'd say 2105, that would be, to me, that would imply a move down to at least the lows over here. But right now, first support is holding. And as I mentioned, upside target is 2250. Now, I had mentioned at the beginning of the short market update, I'll give you information about the Nison candle scanner. We will have a special webcast on Thursday, so look for an email we're going to be sending Wednesday, inviting you to a special webcast on Wednesday about how, and we're going to do this real time also, how to use the Nison candle scanner to find my favorite candlestick signals literally within seconds. Thanks for joining me.